Yes. Good afternoon once again. So we Alpha from Simple Market FX, and welcome to our third training. So don't forget to subscribe, give a like, give a thumb. Let's meet us on our Telegram channel. Join us on the link on the description below. So let's continue with today's class. On today's session, we will talk about Forex market size and liquidity. Yes, this is our first page, Forex market size and liquidity. The bulk of forex trading takes place on what called the interbank market. So this whole process of doing foreign exchange is conducted by what we call interbank market. Unlike other financial markets like the New York Stock Exchange or London Stock Exchange, the forex market has neither a physical location nor a central exchange. No one owns the forex market. No one has the ability to control this market. Only the comprises of huge interbank market. So the forex market is considered as over-the-counter market due to the fact that the entire market is run electronically. That's why we told you that you only need a smartphone and a good internet to be able to do a forex business. This means that the forex market is spread all over the world, all over the globe. You can trade anywhere where there is a network and you have a device of either your smartphone or your laptop. So trades can take place anywhere as long as you have an internet connection, yes. So the current distribution in the FX market is like this, as we have seen. The major currency that is controlling the market currently, the major currency that we use to do payments, we used to do transaction, we used to buy, we used to pay our services, we use US dollars. That's why you see the US dollar has a 4.9%. The coming currency is 39.1, which is euro. We have 19, and other currencies, other nation currencies, which is comprises all them together. We get the 25.0%. So now let's see on the dollar is the king of the forex market. The US dollar is the most traded currency, make up 84.9% of all transactions. The euro's share is second at 39, while the other end is the 30, 19, and all other currencies. There are also other significant reasons why the US dollar play a central role in the forex market. These reasons are the United States economy is the largest economy in the world, as we also know that. The US dollar is the reverse currency of the world. I mean, the reserve currency of the world. This means is a major currency that we use to do transactions or other payment method. The United States has the largest and most liquid financial market in the world. The United States has stable political system that way you use US dollars. The United States is the world sole military. We have represent about half international loans and bond. Lots of countries and foreign companies borrow in US dollar. The US dollar is the medium exchange for many cross-border transactions. Same, all these points cover the same key, which is the US dollar is the largest because we use it to do all our transactions. So speculation in the Forex market, the main function of the Forex market are to transfer funds from one currency of a country to another currency, to provide short-term credit to finance trade between countries, to avoid the hedge against foreign exchange rate fluctuation from when transaction is initiated and when the payment is received, to speculate. So speculation in the Forex market, one important thing to note about the Forex market that while commercial and financial transactions are part of the trading volume, most currency trading is based on speculation. In other words, most of the trading volume comes from traders to buy and sell based on the short-term price movement of the currency. So how to trade Forex? You will read this by yourself. I will send the PowerPoint on the Telegram channel, so feel free to join and download it so you can do a reference by yourself. So how to trade Forex? How do people participate in Forex market? That's the main thing that we need to know. So how to trade Forex? Most of trading conducted through electronic trading network. There is a secondary OTC market that provide a way of retail. For traders or participate in the Forex market, access is granted by so-called Forex trading providers. So we as retailers, we do not have that huge amount to participate in the Forex market. That's why we have a middleman, which are known as Forex trading providers. Forex trading providers trade in the primary OTC market on your behalf. They find the best available prices and then add a markup before displaying the prices on the trading platform. You will understand this later when we talk about MT4 and brokers. So this is similar to how retail store buy inventory from a whole market, add apps, and show up retail prices to their customer. Forex trading providers. Who are these Forex trading providers? Forex trading providers are also known as Forex brokers. Technically, they are not brokers because a broker is supposed to simply act as a middleman between a buyer and a seller, between two parties. That's why when we see we had brokers. But this is not the case because the Forex trading provider acts as your counterparty. This means that if you are the buyer, it acts as a seller. That's why we use this brokers act as a middleman between the large institution where they provide the price, and then they take the price from large institution and provide us to and provide that price to us while they have add up the fee. There are a lot of things that they add before they provide that price to us. So if you are the seller, it acts as a buyer to keep things for now. To keep things simple for now, you'll still use them as a Forex broker, since that's what most people are familiar with, but it's simple. It's important to know the difference. So you had to know the difference between the Forex trading providers and the broker. We use the term broker because that is a word that is familiar to all Forex traders around the globe. So leverage the contract. You actually trading a contract to deliver the underlying currency rather than the currency itself. It is not just a contract, it is a leveraged contract. Retail Forex traders cannot take or make delivery on leveraged spot Forex contract. Leverage allow you to control large amount of currency for a very small amount. Retail Forex broker let you with the leverage, which is why you can open position valued 50 times the amount of the initial required margin. So with $2,000, you can open Euro USD trade valued of $100,000. That's why we use leverage. On every broker that we use, they all have their leverage amount. So we have another term which is Forex spread bet. This Forex spread bet is the derivative product, which means you don't take ownership of the underlying asset, but speculate on whichever direction you think its price will move up or down. A Forex spread bets enable you to speculate on the future price direction of the currency pair. Your profit or loss is dictated by how far the market moves in your favor before you close your position and how much money you have bet per point of price movement. Spread betting on Forex is provided by spread betting providers, which are these Forex brokers. So how to make money on trading Forex? We need to know how we are going to make money on this Forex industry. What is Forex trading? The Forex, also known as the FX or foreign exchange market, refer to global market where banks, institutions, individuals speculate on the exchange rate between fiat currency. How does Forex trading work? As a Forex trader, you are speculating whether one currency will rise or fall in price against another currency. So Forex trading can be defined as the process of speculating on currency prices to try and make a profit. So what we are doing in this Forex industry, we are just speculating the direction of the market. Either the market will go up or the market will go down. If we speculate, the market will go down and the market play as our speculation, we are going to make profit based on that. The value of a currency is influenced by economic, political, geopolitical event, and trade and financial flows. How to read a Forex quote. Currency allowed are always quoted in pairs such as pound USD, USD, JPY. As we have already seen the previous video, if you have not watched it, just refer to the previous video to know how these currencies operate, what are the major currencies, what are the exotic, and more other information. You will find it on the previous video. So if you have not, just stop it and refer to the previous video before you continue with this video. So the reason they are quoted in pairs is that in every foreign exchange transaction, you are simultaneously buying one currency and selling another. How do you know which currency you're buying and which you are selling? Based on quote currency, whenever you have an open position in Forex trading, you are exchanging one currency for another. So here's an example of the foreign exchange rate for the British pound versus US dollar. We have GBP here, we have USD and equal to 1.21228. The pound on the left side is the base currency and the dollar on the right side is the quote currency. So here we are buying pound USD, which equal to the value of 1.21228 US dollar. Now the first listed currency to the left, as I said, is the currency, is known as the base currency, which is pound. The base currency is the referred element of the exchange rate of the currency pair. It always has a value of 1. So what to note here is that the base currency always has the value of 1. The second listed currency on the right is called the counter or quote currency. In this example, the US dollars we have seen here, the dollar is the quote currency, the pound is the base currency. The second listed currency is called the quote. Yes, when buying or exchanging rate tells you how much you have to pay in unit of the quote currency to buy 1 unit of the base currency. So we need to know that the exchange rate tells you how much you have to pay in a unit of a quote currency. The quote currency is the right currency to buy 1 unit of the base currency, 1 unit of the base currency. So here we know, in order to buy 1 pound, we need 1 pound equal to 1.21228 US dollar. That's the meaning of this pair. So in the example above, you have to pay 1.21228 US dollar to buy 1 British pound. When selling the exchange rate, you have when selling the exchange rate tells you how many units of the quote currency you get for selling 1 unit of the base currency. When selling the exchange rate tells you how many units of the currency you get selling of 1 unit of the base. So the vice versa is true here. The exchange rate or price, the exchange rate equal to price represents how much of the quote currency is needed for you to get 1 unit of the base currency. So here the exchange rate is 1.21228. That's the meaning of this. If you buy Euro USD, this simply means that you are buying the base currency and simultaneously selling the quote currency. In caveman talk, buy Euro, sell USD. You'll buy the pair if you believe the base currency will appreciate relative to the quote currency. You will sell the pair if you think the base currency will depreciate relative to the quote currency. Here on buying and selling, we have 2 terms. We have long, we have short. We don't have any other terms for buying and selling. We use 2 terms, long and short. So if you heard someone tell you long GBP USD means buy GBP USD. If you heard short GBP USD means sell GBP USD. First, you should determine whether you want to buy or sell. If you want to buy, which actually means by the currency, and sell quote, you want to base the rise in value and then we'll sell it back at a higher price. Let me show you one thing here. Okay, there we have this. There we have this sell on Audi US dollar. So here, currently, we were speculating the Audi USD to short. That's the meaning of this. So here, this is the SL, this is the take profit level. So if price goes above here, we are out of the market. That means this analysis, we speculate a wrong side of the market and we need to reanalyze again. So here, I wanted to show you this. Let me zoom in. Okay. Now, this is the rate or the price that we're talking about. And these are the pairs that I have explained it to you on the previous video. Told you again, if you haven't watched the previous video, refer to it, then continue with this one. So these are the pairs. This is the last pair. You can create it the way you like. You have the buying and the selling price, but I don't prefer this. I prefer to watch on the last price that we have. So on Audi USD, you can see here we have 0.6629, the current price moving, which is the last price of this Audi US dollar. So the current rate of Audi US dollar is 0.6629. Okay, now let's continue with our PowerPoint. If you want to sell this so-called going short or taking a short position, if you want to sell, which actually means sell the base currency and buy the quote currency, you want the base currency to fall in the value and then would buy at a lower price. This is called going short or taking a short position. If you have no open position, then you are said to be flat or square. That means you don't have any trade. You're not buying or you're not selling anything. So the bid, ask, and spread. What is the bid, ask, and the spread? All Forex quotes are quoted with two prices, the bid and ask. The bid, in general, the bid is lower than the ask price. This one is the sell, this one is the buy, Euro USD, Euro, this one is the lot size or the margin, you'll see it later. The bid is the price at which your broker is willing to buy the base currency in exchange for the quote currency. This month, the bid is the best available price at which you, the trader, can sell to the market. If you want to sell something, the broker will buy it from you at the bid price. Okay, now let's continue as the ask price is the best available price at which you can buy the market. Another word, ask is the offer price. If you want to buy something, the broker will sell or offer it to you at the ask price. So let's see here. What is spread? So so this one is the selling, this one is the buying. So this one is the ask, this one is the bid. So for sell, we hit bid. For buy, we hit ask. So, but most of the time you won't see bid and ask here. You will only see sell and buy because they simplify things. Okay, what is spread? The difference between the bid and the ask price is known as the spread. So buying price minus selling price equal to spread. On the USD quoted above, the bid price is 1.34568 and the ask price is 1.34588. 34.56.8, 34.58.8 buying price, selling price, ask, and this one is bid. So if you want to sell, you get sell and you will see Euro start at 34.56.8. If you want to buy, you'll click buy and you'll find that the buying price is 1.34588. For the base currency, counter currency, bid, ask, pip, spread. We have seen each and every part of it. So I assume that now when you see the currency pair, you see the buying price, you see the selling price. If you see the asking price, you won't get confused. If someone asked you what is the spread, you won't get confused. The last thing I want to explain to you is a pip. As I told you that the pip is the spread. which means that the difference between bid and ask, the difference between ask and bid is what we get the pips, or another name known as the spread. That's how we get to this. And this spread is the difference between ask and bid to the broker when they want to sell this currency or this at their own price level. So when the number of pips change depend on the rate of value. So here on the pips, we will cover a lot more to explain. We have a lot of to explain concerning the pips. And I think this will be the next session. So if you haven't subscribed to our YouTube channel, don't forget to subscribe and leave a thumb behind. Also share this video to other traders who want to learn how to trade, who are new beginners, who want to explore the Forex market. Thank you so much. Have a nice day. Have a nice profitable trading week. Soon we are going to share all our setups concerning this week. Don't forget to join our free Telegram channel on the link on the description below. Thank you so much.